This is Jeremy Hutzel, President and CEO of Seven Springs Wealth Group. I'm joined today by our Chief Investment Officer, Andy Michael. Andy, we've been meeting with clients again over the summer. What's in the news over and over again? Market at all-time highs. Question we keep hearing from clients is, how do I invest with the market at all-time highs? What's to be done here? I've always heard buy low, sell high. I know you've done some great analysis on what this looks like historically. Care to share with us?
Yeah, and it's something that we have been thinking a lot about as well. And we're also seeing the data start to soften a little bit on the economic side. And so, you have these markets at all-time highs, yet you have data softening. What should we be doing right now? On the quantitative empirical side, JP Morgan ran a really interesting study, and they found on investing at an all-time high in the market, if you look out of those returns, 3 months, anywhere from 3 months to 5 years out, you actually outperformed compared to investing on any other day in the market. Usually you think it's at an all-time high, I need to sell and go away. Well, the reality is the data would say you're actually better off technically to invest at the all-time highs because the market is in one of those positive trends. And we expect markets to grow over time. That's the function of markets. Businesses grow revenues, they grow earnings and profits, they grow dividends. As a result, the market appreciates over time. And so by investing at the all-time highs quantitatively, we see that it can be a good long-term experience for clients on average over time. Now, having said that, we are seeing a lot of softness in the data right now. So we do want to still be fully invested for those long-term outcomes that we're always talking about. But at the same time, we want to be prudent. And we do see some opportunities where we can harvest some of those rewards, some of those gains that we've seen that now we are reaching all-time highs, for some of those clients that have some short-term needs coming up. For some of those clients where we like to rebalance, where portfolios have gotten a little overextended beyond those risk targets that we really want to come back to all the time. And so it's a natural function for markets to keep moving to new all-time highs. That's what I expect today. That's what I expect 5 years from now, 10 years from now. That's why we invest. But at the same time, we want to take that balanced approach and be prudent when we do have this, especially as I mentioned, we are seeing a little bit of that softening in some of the data right now.
It's interesting. I think back to where Warren Buffett learned about investing, and it was Benjamin Graham, who may not be the household name that Warren Buffett is. And the piece that Benjamin Graham was missing from his analysis that you've just clearly illustrated exists in today's market is momentum. Momentum is really a key piece of investing. And there is a lot of momentum when a market is setting highs. Typically, it goes on to set new highs. So I think you raise a really good point there about not just selling because the markets are at all-time highs, but trying to think prudently within the portfolio about valuations. And that really runs the gamut. Some stocks are going to be overvalued in the bull market, and some are still going to be undervalued and underappreciated. And it sounds like you're seeing that in our client portfolios. But for those folks who need liquidity in the near future, what should they be thinking about?
Yeah, I think this is a great opportunity for those that do need that liquidity coming up, especially if they are overexposed to equities in relation to their portfolio. One of the big things that we've been considering for clients is even having to take some potential gains, right? We don't want to let the tax tail wag the dog. We want to be tax efficient, but we don't want to always let taxes drive all of our decisions, especially when we've had so much success. Sometimes we call tax realizing success. So those are some of the considerations that we're having right now to think about if this is a time that we want to prudently take some gains. And for a lot of folks, they can do that in a very tax efficient way still. Which we think is really, really important right now.
Well, let me interject and give a shameless plug for you and the investment team here at Seven Springs Wealth Group, because I know when we had volatility earlier in the year, you all were very active in engaging in capital loss harvesting for this very scenario, where now you can take gains from highly valued, richly appreciated stocks in a very tax sensitive way. So again, kudos to you and the team, and for everyone out there who's working with an advisory team, I hope they're delivering the same kind of sage counsel and advice throughout these volatile markets. If you'd like to find out more, please contact us in the information below.